Hello, good morning and welcome to today's morning report with me, Rich Perry, market analyst at Hand Tech Markets on Thursday the 4th of December. It is ECB day and the markets are consolidating in front of the ECB. Quite often this is the case, that the European trading session is sort of fairly cautious in front of the ECB announcement and Mario Draghi's press conference, but then explodes into the afternoon as it gets leads onto where the ECB is thinking in terms of monetary policy. Overnight, we did see Wall Street markets pushing strongly higher. Again, the S&P 500 pushing into an all-time high closing level, up 0.6% on the S&P 500 and 0.4%, excuse me. And also that helped to push Asian markets high. But the European trading session is slightly cautious. DAX up 0.4%, but FTSE and CAC are basically flat. What we have got, or certainly have had yesterday, is this big breakout on the US dollar, strongly moving above the out of this consolidation sort of trading channel there that we had over the past month or so. But that broke strongly higher, and that also took us out to the highest level on the dollar index since March 2009. So it's a very big breakout, and it's just consolidating slightly today, as I said, with this ECB decision coming up. But it certainly looks like the dollar is just now manoeuvring itself for the next bout of strength. In front of the ECB, we haven't got a great deal until we've got the Bank of England monetary policy at 12 o'clock. Bank of England not expected to move anything in terms of rates or quantitative easing, and the interesting facts will probably come out in the meeting minutes, where the potential, I suppose, is for just in her comments recently, Kristen Forbes, one of the MPC members, has just started to turn a little bit more hawkish, not majorly, but just started to giving some hints in terms of potentially moving camp from the doves to the hawks. But as I said, that will be more in the minutes. Nothing really we're going to gain from this Bank of England meeting today. The ECB, what we are looking out for is Mario Draghi to be fairly dovish as ever, so to talk the euro down in an attempt to talk the euro down. Also, we're looking at the staff projections from the ECB. Now, the interesting fact is that if they start to cut once again the inflation target projections, that could be seen as sort of preparation for for next year, which may well be when we start to see quantitative easing in a full-blown form in terms of sovereign debt purchases. Also, Draghi may well talk about balance sheet expansion, which he has done previously, and when he talked about balance sheet expansion, that sort of, again, that would sort of be setting us up for potential QE next year. The potential, I suppose, is for a bit of a volatile reaction, as ever with the ECB, but there could also be a bit of a disappointment, I suppose, if Draghi doesn't do necessarily enough in his rhetoric to drive the euro lower, and there could be the market could be a little bit disappointed or feel a little bit shortchanged in terms of the expectations for QE. So there is a possibility, I suppose, today for a bit of a euro rebound, but I would be using that as a chance to sell anyway. But that sort of is the ECB and the Bank of England today. My chart of the day is the Kiwi dollar. The Kiwi dollar has been, this is on the hourly chart, it's actually held up fairly well over the past few weeks, really, until yesterday when it started to break down, and it certainly looks like it is breaking down. It's sort of following the Aussie dollar lower now. The Aussie is at multi-year lows, and the Kiwi is not yet at multi-year lows. This floor around 76.80 is crucial on the Kiwi. This sort of marks this big floor that we'd seen back from 2013, and that sort of remained intact, but it certainly looks as though the pressure is growing to the downside now. The momentum indicators have all turned over and look like they're beginning to put pressure back on the downside. Stochastics falling in fairly strongly now, MACD lines turning over, giving us a cross underneath the neutral line, which I believe is a very bearish signal, and I think it just suggests that we're going to be coming back to retest this 76.58 level, which was the intraday levels, the intraday spikes before the rebound. So I think those levels will be tested, and I think that any rallies on the Kiwi are now seen as a chance to sell. In terms of where we're looking at, there is a bit of a pivot level around the 78 mark, which has been seen over recent weeks and months, but I would say that 78 would be an ideal entry point, I suppose, on a rebound. But it certainly looks like we're now on the move lower. So any chance to sell, I think you get, should be taken. Anyway, I wish you good luck in your trading on the New Zealand Kiwi dollar today, and I will speak to you later. Thank you.